Hey guys, this is Fro Lombardi. It's time to go over supports and resistances. I'm sure you already know what that is, but I'm going to show you how I use it to be a successful trader. Let's get to it. Alright, so right here you can see I have my beautiful GBP, JPY chart all marked up with my supports and resistances. So you're going to see how I do this right now. So let me start new. Alright, perfect. So what I do is I go to the monthly chart first. Now, hopefully you guys already know that the higher the time frame, the stronger the supports and resistances. The higher the time frame, the more reliable a pair is. The higher the time frame, the less volatile it is. All right. So higher time frames are key to understanding why the price does what it does. Okay. So a resistance point is a peak at which the price will bounce down, and a support is a low price at which the price will bounce up. Now, you can find these on all of the time frames, different supports and resistances, but they're strongest on the high ones, all right? So what I look for when I'm drawing my supports and resistances are, of course, peaks and lows, all right? Or peaks and troughs, okay? So I like to measure them out with my crosshair tool, see how even they are on the chart, and then I finally like to draw them out with the horizontal line tool. So I already see a great peak right up here. Some people like to draw it at the body like I just did. Some people like to draw them at the top of the wick. For me, it depends on what I'm feeling, how I'm looking at it, you know, how I scope out the pair. But you'll kind of get a feel for that as you're doing this. It's not really something that you learn right away. It's kind of an art. Alright, I see another one over here. Okay, so those are cool resistances. Now I'm looking at supports now. Here's one. See how it bounced over here. It also bounced over here. Something to know with supports and resistances are that the more often they bounce off at that point, the stronger they are, the more reliable that they are. At the same time, be aware that supports and resistances do break. So if they've bounced off of that point multiple times, you know, it's probably gonna break soon. All right. So it's kind of a double-edged sword. You got to be careful. All right. Here's another one. Nice resistance right there. It bounced off here and around here as well. You can't be too picky, but you have to realize when they're important, and that's something that you have to learn. That's something that, you know, somebody can't really teach you. You have to learn when they're important and when they're not. But this is the monthly time frame, so pretty much anything you see is fair game because it is such a high time frame. Okay, and most of us are not trading that high. We're trading on the hours and below. All right. Let's see if I can find anything else before I move out of this pair. I move out of this time frame. Here's a good support right here. Bounced off of there. So this one over here. You do want to adjust them if you don't draw them too well. You see how here, for example, I drew it at the wick and not the body because it matched up better with the support over here. Alright, so if I matched it on the wick over here, I was able to match it on the body over here, and that's cool. Alright, so now I'm going to move down to weekly. Check it out. I like to zoom out a lot. Get my crosshair. This looks like a good run right here. It hit 2 times. Always adjust. Always adjust. Okay. Let's see. This one looks like one. You see it hit over here, and it also hit over here. Cool. Alright, this one. There. Alright, let me zoom in one more, go to my daily. Alright, we got a kind of consolidation over here that turned into a good resistance point. Alright, looking good, looking good. Alright, so when you, as you move down the time frames, you're going to have to adjust your supports and resistances that you drew on the higher time frames a little bit, because since it's so zoomed out on the higher time frames, they're not always as precise. So it's good to have them precise and clean. That's how we use these, alright? You want them nice and precise. But at the same time, do realize that supports and resistances are areas. They're not exact price points, alright? They're almost never exact price points. Realize that, okay? But it's nice to draw them clean and precise. Clean and precise as you see them, but in action later on, they might not be as precise. That's why it's even more important to draw them precise, so later, you know, you can have it as precise as possible, even if it can't be perfect. All right. All right, cool. So I drew that out. I usually go to the daily or the 4 hour. I'll zoom in and show you guys some 4 hour action over here. Let's see. When you get lower time frames, you want to be you want to discriminate a little better about what you draw. You don't want to draw everything. All right. There's a good one. There. Because it bounced off of here too. Yeah, because you don't want to draw everything, because if you draw everything you see, if it's not important, later on you'll look at it and you'll think that it's a good price point where the price is going to bounce, and then it's really not. All right, so you gotta really make sure that what you're drawing is good. All right. This one looks like a pretty decent one right over here. You can draw that. See, because well, I'll explain in a minute why I drew that. But anyway, so I was able to catch a pretty great trade. I was able to catch this drop on the, or rather this drop on this pair, and I'll show you how I did it. Hopefully you guys have some knowledge of patterns. If you don't, then I can dedicate a separate video to that. But I will show you, I will demonstrate the head and shoulders pattern, which is how I was able to detect this drop, and I'll show you how I used it in conjunction with the Fibonacci fan. So real quick, I'm just going to go over this real quick. A head and shoulders pattern is a peak, a higher peak, a peak that's at the same price as the other peak, and then it falls down. All right, so let me draw that real quick. All right, so we got a peak, higher peak, same peak as before, and then a down. All right, now here's what we call a neckline right there. You see that line I drew? That's called a neckline. That's the price at which you know, the peaks kind of pull back to. All right, that's the neckline. And then you often see a retest of the neckline after the price has begun falling. But let me zoom in and show you guys that in detail. Go to the hour. All right, that's a little more clean. All right, so we have this neckline right here. You see that right there. And we see that the price passed the neckline, but then it retested that neckline. So let me get my crosshair to show you guys. So here's approximately where the neckline is, and notice how it's a support that I had already drawn, and it passed that neckline here, but it pulled back up, tested the neckline again. All right, tested this half of the neckline, and then it bounced down again, and that's where I caught the drop, and that was awesome. All right, so the key thing to note about the head and shoulders pattern is that it will retest it, and that you can't get too ahead of yourself. You have to wait for the retest to get that bounce down. Yeah, so that's just a quick review about what the head and shoulder is. If you need some review later on, I'd be happy to review that. All right. One last thing to tell how a head and shoulders pattern is valid, how to confirm the head and shoulders pattern, is that after the third peak, when it drops down, one of the candles should close below the neckline. All right, so you see how this candle right here closed below this neckline. All right, it closed right below it. That's often a sign that it's going to start retesting and then it's going to drop. Doesn't always retest, but you should watch for it. All right, because you don't want to place a sell, lose all these pips, and then, you know. All right. So yeah, that's the head and shoulders pattern. Now let me show you how I was able to use it in conjunction. All of this, you know, the supports and resistances, the pattern, in conjunction with the Fibonacci fan. All right. So I already did a video on the Fibonacci fan, so I'm not going to explain it. I'm just going to go right to it. If you don't remember, then go ahead and watch my Fibonacci fan video. So I drew it from my low to my high, my swing low to my swing high. All right, and we see now that here in this area it's really helpful. All right, because we saw the neckline, you know, it bounced off the 38.2, bounced back up to my resistance point, bounced back down to approximately the 50 area, showed you the pullback, all right, showed you where it was pulling back, and then dropped. All right, now I will look for right here if the price starts to climb a little bit again, right? And then drop a little bit more. So I'm going to look here for a little bit of consolidation or a little bit of a pullback, right? Because we got this 61.8 line right here. All right. So I was able to use it in that way, right? With this swing low and this swing high. But what's even better is that I drew it from this swing high to one of these swing lows. All right. All right. So this is awesome because it showed me approximately when the test of the neckline was going to end and where the bounce down was going to begin. All right, so we had this first Fibonacci fan I drew, and now we have this second one. All right, so this one is great because it showed me, again, right here was an area where the third peak was in formation, bounce back down. Here's my other Fibonacci fan. Now bounce back up. Now this 38.2 of this second Fibonacci fan is the resistance point of the neckline, where the retest was. And guess what? It hit the 38.2 of this second Fibonacci fan, and then it bounced down. All right. So that's kind of a quick way showing you guys how I use support and resistances, how I use the Fibonacci fan. I really hope that you guys will use this in conjunction with each other because this is really important to becoming a naked trader, a trader that doesn't rely on indicators. Okay. I think it's really important as a trader to kind of lose the training wheels per se, lose the indicators as you get more advanced because naked traders kind of feel the market more organically. Okay, they feel the market, they know how it moves, they know why the prices do what it do. So if you really are looking to trade, as a profession, or as a career, you want to make your living as a trader, then I would really suggest following the strategies that I showed you here and asking me any questions that you guys have, and I'd be glad to help. All right, so study up, guys. Happy trading. Thanks for watching.